conservatism, consistency, full disclosure, and the last part will be materiality. So these are your accounting conventions. What do you mean by consistency? Now, one rule you are following means same rule you will follow for next 10 years also. So that this we call it as consistency. IFRS means International Financial Reporting Standards. Hello everyone, I am your Adarsh sir, lecturer in Vidhyaashram First Grade College, the Temple of Excellence. So, we are in the session 3 of your topic called accounting. Under accounting, we are doing the topic is accounting conventions. So, in the previous session, we done with accounting concepts. Now, in today's topic, we will do accounting conventions. So what will be your agenda? Agenda is very simple. We will work out or we will learn about accounting conventions. Along with accounting convention, we will do accounting standards also. Accounting standard, it is not theory oriented. Just you have to remember the points. Now, what are the accounting convention? How many accounting conventions we have? Yes, we have 4 accounting conventions. Now, so the first thing will be consistency. Second one, conservatism. Third one, materiality. Fourth one is full disclosure. What are those 4? First one, conservatism, consistency, full disclosure, and the last part will be materiality. So these are your accounting conventions. Now, in this, easy to remember, CMF. C will be square. Consistency, conservatism. M for money measurement, F for full disclosure. Clear? Yes. Now, we will understand each and every conventions in detail. Now, the first thing will be accounting convention, that is nothing but consistency. What do you mean by consistency? Now, one rule you are following means same rule you will follow for next 10 years also. So that this we call it as consistency. Or else I can give you best example. Now, so maybe your favorite cricketer maybe Dhoni or Kohli. Now, in this, every match if Kohli hits like 80, 70, 60, 50, 110 and 40, 60. So this will be his score for last 7 to 8 match. This we call it as consistency. Now just see the consistency. So will have the same level. So he is following that consistency. Now, same thing if you go with Dhoni, he is also around 80, 50 or 40, 30, 35, 40. Every match his score will be almost 40, 35, 50 like that. This we call it as consistency. The same batting lineup if you go for some Mohammad Shami. So it will be what? One match he will hit 10, another 0, another 0. One more match he may write 80 or other match it will be 0. It cannot be Shami, it may be Ravindra Jadeja. Now, one match he will score 80, next match back out. Other match he will score 10, again 0. This is not consistency. Consistency means following the same standards. We call it as consistency. Now, how it relates to your accounting. Now, consistency means if I am using one method of depreciation. Depreciation means what? Reducing in the value of the asset. Like you bought your mobile for 30,000. After 1 year, you can sell it for 20,000. Why there is a reduction in 10,000? Because you have used for 1 year. There is a changes in the model and it is you have used and there is a second hand. So for these reason, we reduce. That reduction we call it as depreciation. Now, we do depreciation for 1 year. Now, whatever depreciation we do, there are many methods are there to calculate depreciation. It may be straight line method, it may be WDV, return down value method. There are many methods are there. For example, I am following straight line method. Now, in 2020, I followed straight line method. 2021, same method. 22, same. 23, same. 24, same. Every year, I am following the same method. This we call it as consistency. If you change in the method, each year if you are changing like straight line to WDV to weighted average, if you are changing your method means you cannot compare your current year data with your previous year data. Why? Because this time you have done some other system, last time you have done some other kind of system. That's why comparison cannot be done if it is not consistency. So normally they expect you should have consistency in everything. Clear? Yes, this is called consistency. We'll learn this. According to convention of consistency, once the company has decided to follow a method of accounting, then it shall continue or consistently follow the same method throughout. Along with this, changing the accounting method often would make the comparison of its own financial statement difficult. Means it is nothing but you will get different comparison. So different period difficult for company. Every year if you change the methodology, it will be difficult to do comparison. Clear? This is called consistency. Now, we'll go for next one. Convention of materiality. What do you mean by materiality? Very simple concept. Under materiality means you will go with some standards, like if you have paid income tax, the word income tax is material. Material means very important. Even though you have paid 100 rupees income tax, you will mention in the book you paid 100 rupees as income tax. Now, you have paid for some coffee, tea, bus charges and everything. What you will do? You will write it as refreshment expenses, some 500. You will write it as traveling expenses, some 1000. Even though you may gone by auto, bus or something, some taxi, you will not write taxi 500, auto 400, bus 200. You will write it as traveling expenses. All put together, you will name it as traveling expenses. This is called materiality, the weightage of that word. Now, we'll understand this. As per the accounting convention, materiality, an item is material, means more value, if it can influence the decision of the user. With that word, because income tax today it may be 100, tomorrow it may be 1 lakh also. But whatever income tax you are paying to outsider, that is material event. Now, influence the decision of user of the financial statement. This convention is related to the significant important now of any event or item. Moreover, the materiality of an item depends on its amount and events. Materiality depends upon its nature. Like income tax, I told you, no, it depends upon the nature. Materiality will changes. Clear? Yes. This is called materiality conventions. Clear? Yes. Now, third one. Conservatism. What is the meaning of conservatism? Very easy to understand. Conservatism means nothing but whatever incomes you have, incomes, whatever expenditures. Now, for income, you're supposed to receive. You have not yet received. You are supposed to receive. You cannot make any plans or provisions for this. Why? Because income cannot be expected earlier. But Expenditure, you can make provisions. What is provisions? Like next month you have to pay your salary, your rent, your electricity bill, your provisions bill, everything. What you will do? You will keep your salary amount as a reserve to pay all the expenditure. But income, whatever you are collecting, you will not make any provisions or reserves. Clear? Very simple language. You will not make any plans or provisions for income. You will make plans and provisions for your expenditure. Clear? Yes. Now, as per the conservatism convention, at the time of recording any financial transaction, you should recognize no profit but provide for all possible losses. This is very important. You should recognize no profit but provide for all possible losses. Clear? For all the possible losses, you have to make a provision. Now, this is the most important convention as it depends upon the theory that the future is uncertain. For all the losses, you have to make some plans, but all the incomes, you cannot make any plans. Why? Because future is uncertain. So, you thought that you will collect some 10,000 from somebody. So, something may happen to him. You will not collect that 10,000, but you have to pay 1,000 to government as a tax. Even though anything may happen, the government will collect 1,000 from you. So, for losses, it is compulsory. Income, it is optional. Clear? So, this is called conservatism. Now, see, all the provisions we made for losses, but for profit, no provisions. Clear? Yes. And the next one will be full disclosure. Full disclosure means even though you made 1 rupee expenses, you have to show that. Even though your expenditure is only 10 rupee, you have to show that each and every expenses are income irrespective of its amount, irrespective of its number, irrespective of its value. You have to mention in your books of accounts. That is called full disclosure. See, everything he is searching, even though is there any 1 rupee is missing. Now, so each and everything you have to find out and write. Maybe you paid 5 rupees for coffee from company money. So you have to mention that. You paid 2 rupees for eraser. It is not paid out of your pocket. It is paid out of what? Out of your company money. So for that also you have to record. This is called convention or conventions of full disclosure. Now, full disclosure convention helps the user in the proper interpretation of financial statement of company. If you record each and everything, then it is nothing but your accounting is showing exact answer. Means you have missed out small 1 rupee, 2 rupee and all put together it comes around 1,000 rupees. If you missed out 1,000 means whatever the profit or loss showing in your record, it is not accurate. It is not the exact value. Hope you are clear. Now, as per this convention, at the time of preparing records, full disclosure of financial information shall be made by the accountant. Clear? So, full disclosure responsibility will be taken by whom? Will be taken by accountant. This is all about your convention of full disclosure. Now, so we're done with your conventions. Like, I'll go back to all your slides so that you can take screenshot of that. So, this will be your first convention, that is convention of consistency, conventions of materiality, conventions of conservatism. This is convention of full disclosure. Now, the next part will be very simple. That will be your international financial reporting standards. We can call it as IFRS. Now, IFRS means International Financial Reporting Standards. Now, so we have many IFRS, but in our examination, normally they will ask IAS. What is IAS stands for? Indian Accounting Standards. What is that? Indian Accounting Standards. Along with your concept and convention which are given by accountants. But these are the accounting standards. This is almost maintained and followed by everybody. If it is not followed, means you will be penalized. Means you have to pay penalty for that. Now, how many accounting standards are there? Like IFRS, we have many, like 40 plus, but accounting standards, you have how many? How many accounting standards you have? Now, at right now, you have 32 accounting standards. Now, if you Google it in your Google this thing, so it may change. Like sometimes you may get 28, 32, 31. Why? Because every year they may do deletions or additions. Normally they will not do any deletions. They may make any addition to your accounting standards. Right now, as per 2020, we have 32 accounting standards. Now, in your examination, they will not ask you anything about accounting standards. They will ask you only write any 10 accounting standards. It is nothing but for your 5 marks question. What you are supposed to do? You have to write any 5 accounting standards. Now, so these are your IFRS which are issued by whom? International Accounting Standard Board. So they specify how many company must maintain and report their accountant. If you are doing your business globally, like if you have any international market, then you have to follow this IFRS, International Financial Reporting Services. If you are not doing the business globally like international level, if your transactions are within India, then this IFRS is not required. Only you can follow Indian accounting standards. IAS you have to follow. That is the most important one. IAS, Indian Accounting Standard. How many accounting standards we have? We have 32 accounting standards. So please take a screenshot of this. This is just 5 marks theory. Along with that, you have to write these standards also. Now, so these are the accounting standards. As I told you, these are not IFRS, but few accounting standards which are similar are which are linked with your IFRS also. Now, so these are your accounting standard. Always remember, you should write accounting standard along with its numbers. You have to write accounting standards along with its numbers. Now, as per this first one, policies related to accounting disclosure, accounting related policies and policies related to accounting disclosure. This is your accounting standard 1. Second one, in detail it is not required. They will not ask you what is accounting standard 1, what is accounting standard 7. They will ask you only write any 10 accounting standards. Now, the second one, valuation of inventory. Third one, cash flow. Fourth, contingent and event occurring after balance sheet date. Fifth, net profit or loss for the period, prior period items and changes in accounting policies. Next, construction contract. Next, revenue recognition. Next, property, plant and equipment. Next, the effect of changes in foreign exchange rates. Next, government grants. Next, accounting for investment. Next, accounting for amalgamation. And the last one, employee benefits. So these are called as accounting standards. These are called as accounting standards. Now, so total we have around 15 accounting standards. Try to remember at least any 10. So, need not to remember in a row or in the same order. You can pick like valuation of inventory is easy, cash flow easy, construction contract third. Directly you can come to this, but you have to mention AS7. AS8 it is deleted. Now it is not there. Now revenue recognition ninth one easy. Government grants 12 is easy. Accounting for investment easy. Amalgamation easy. Employee benefit also easy. Out of it is not around 15. One it is deleted. Deleted means not from the screen. From accounting standard itself they have deleted. It is so the rest of the things total you have 14 accounting standards. So out of 14 you are supposed to remember any 10. Now please take a screenshot of this, very important for your examination. So this is all about your today's session. We discussed about your accounting conventions. So what kind of conventions you have? What is conservatism? What is consistency? What is materiality? As well as what is full disclosure? Now, along with that, we also understood accounting standards. Under accounting standards, we did like your what is IFRS as well as accounting list of accounting standards. There are around 32 accounting standards are there, but we discussed only 14 accounting standards. These all are your theory part. From the next session, we will go for problems. That will be your journal entries. The first part will be your basic concept. Second part will be your concept and convention we completed. Now we are in the third part, that will be your journal entries. Thank you.